I'm Jess Norman, and on behalf of the MGAA, I'd like to welcome you to our briefing this afternoon, which has been delivered by HSB. Before handing over to our presenters, I'd like to run through a few housekeeping points. I need to advise you that this session is being recorded. Please ensure your microphone and camera are off. The MGAA's Programme of Learning and Insights has been accredited by the Chartered Insurance Institute for the quality of content and supporting materials, with CPD hours applicable if relevant to your ongoing professional development. A recording of this briefing will be available on our website and MGAA YouTube channel with the PowerPoint presentation to follow post-event. Finally, I'll be posting a link to a feedback survey in the chat box. Please do take the time to complete this, which should take no more than 2 minutes, as it allows us to deliver the best quality events to our members. So today's briefing, the true cost of equipment failure, why equipment breakdown insurance is essential for businesses, is being delivered by Daniel Maskell and Rebecca Brennan. And that's it from me for now. Daniel, it's over to you. Thank you.
Thanks, Jess. And I would like to thank everyone for attending today, and certainly for the MGA for giving us this opportunity. Before we start, I would like to briefly introduce myself and then pass over to my colleague and co-presenter, Rebecca. My name is Daniel Maskell, and I currently work as the Head of Sales and Partnerships at the team at HSB. I've been in the industry over 30 years in a variety of client-facing and underwriting roles before spending the last decade at HSB underwriting all of our product lines. And I'll pass over to Rebecca briefly.
Hi, I'm Rebecca. I'm the Claims Relationship Manager at HSB. I've worked in insurance for over 10 years now, starting out as claims handling and moving up to claims relationship.
Right. The learning aims and objectives today. Over the next 30 to 40 minutes, we will talk you through some of the following points: how the world of equipment breakdown is evolving and highlighting some of the risk consideration and trends that you should be aware of to protect your customers, why there is a real need for the coverage, and how equipment failure could severely impact your customers' finances. Rebecca will then talk us through some real-life claims examples to hopefully bring this coverage to life and give you a feel for the types of losses that are normally covered under this product. To conclude, I will talk a bit more about this cover through some of the common myths and misconceptions associated with breakdown insurance. The aim is to give at least 15 minutes at the end to give you the opportunity to ask us any questions that you may have, but please feel free to drop these in the chat as we run through, and we can always pick these up at the end. Hopefully by the end of the session, you will be able to confidently be able to describe how evolving technology is impacting businesses and their insurance needs, explain the financial implications of an equipment failure, give examples of the types of equipment and the industries that are most at risk from breakdowns, and you will be able to dispel some of the myths that surround breakdown insurance. I wanted to start with a question. How long would one of your customers survive if a piece of key critical equipment broke? Do your customers know? Can they afford not to know? What did our research tell us? 62% of SMEs would last less than 3 months. 26% would last less than 1 month. I will reference these stats at various points throughout the presentation, but I figured it was a good, if not sobering, place to start. The origins of breakdown insurance. Breakdown insurance for me is one of the very much forgotten insurance perils and often the last thing that we talk about with a client. This is despite the world that we are in and around becoming more mechanical, automated and connected than ever. To understand the subject better, it's probably best to start from the very beginning and have a very quick insurance history lesson. All insurance is born out of necessity or legislation, or a combination of both, and equipment breakdown is no different. It was very much born out of necessity. In the 1800s, during the Industrial Revolution, it was needed to enable the cutting-edge technology at the time, which was steam. Why breakdown, I hear you ask? Like all new tech, it had its teething problems. And in the case of steam technology, it was quite literally explosive. There were many incidents of boiler explosions which resulted in significant loss of life and severe property damage, and this put potential advancement of technology at risk. It was actually the creation of the Manchester Steam Users Association and the Boiler Assurance Company that changed things. Membership gave access to boiler engineers to inspect the plant, dramatically reducing the number of incidents, and also enabled access to insurance to protect the insureds if the worst was to happen. As you can see from the timeline, the product has been able to stand the test of time and has seen many changes during its lifespan. From the introduction of electrical energy and assembly lines in 1870, which brought massive efficiency gains and kicked off the concept of assembly lines, bringing mass production to life and making luxury goods more accessible to the masses. Then in the late 60s, we saw the introduction of computer and electronics, enabling even more complex processes to become automated, many of which we rely on in our everyday lives. Bringing us into the modern day, the integration of big data, using artificial intelligence, augmented reality, and the Internet of Things and connected devices. At each step, our reliance on technology has increased, and so too has the relevance of breakdown insurance. How does breakdown insurance relate to your everyday life? What we can see is that the rate of change in the tech space is increasing rapidly, and as I mentioned, we have become more reliant on it than ever before. If we relate this to our everyday lives and our tools of the trade, we get a sense of how quickly things have progressed and the potential impacts. As insurance professionals, we're largely office-based or potentially home-based these days, so the tools of our trade are generally our laptops, maybe an iPad, a tablet, or a mobile phone. These devices are reliant on internet connections, electrical supplies, email servers, Teams, or chat providers to even function. Now just think about how productive you will be if one of these key items of equipment stopped working. I'm sure that most of you will have first-hand experience of this, so you probably don't need to imagine. I can name a number of examples over the last few years where I've been faced with a blue screen that cannot be fixed easily. Before we became more dependent on our tech, this would have been seen as a welcome opportunity to catch up on some filing or have a chat with a colleague. But now even that is electronic. You can't literally do a thing if you lose connectivity. Now, obviously, the insurance solution for our tools of the trade would be computer insurance or office breakdown. But the exact same thing is happening across all other industries. It's just the tools of their trades are much more bulky and expensive and come with slightly different requirements. Most of these items can't be fixed by simply turning them off and back on again, and often they are very complicated shutdown or startup procedures which often have severe consequences if they're not followed correctly. So a specialist product like equipment breakdown is becoming more important than ever when things do go wrong. I will give you a quick example of how evolution is playing out in the industry and some of the risks surrounding it. There are a number of industries that used to be considered relatively low tech, but now are some of the most complex and sophisticated out there. If we take a look at warehousing, for example, just a few years ago, the equipment was probably limited to a few forklift trucks whizzing around, moving pallets from one place to the other, and people picking stock and putting it into baskets. Today, the likes of Amazon and Ocado have created almost fully automated warehouses where they use robots, radar technology, and conveyor belts to pick up and deposit items. This enables them to stock more items, offering customers a wider variety of choice while shortening delivery times, reducing costs, and enable them to scale to meet the growing demand from customers. If you get a few minutes, I do recommend that you check out the video of the Ocado warehouse on YouTube. It's pretty mesmerizing watching all the robots running around the grid system, picking up items and putting them into the customer basket. I think it's very plain to see now in many industries the process and reliance on the equipment has evolved significantly. But here's the big issue. What we often find is that customers' buying habits in terms of insurance haven't kept up. Many are still buying breakdown cover on these items that require statutory inspection only, things like the forklift truck, boiler. But in reality, these are the things that whilst they can cause physical harm when things go wrong, they can often don't cause very serious financial harm to a business. In reality, it's things like a broken lift that won't put you out of business, and downtime as a result of a faulty electrical system, which will have a much more significant impact. To ensure that our customers are fully geared up for the future, we need to change that perspective. One thing that's also advancing our requirements for breakdown insurance is the move to greener buildings. All of the items in this picture can potentially be insured Only some of these items would need a statutory inspection, so may be an area of exposure for your clients if they don't consider these for insurance. The building and all the equipment is often one of the largest investments, and running these buildings will certainly be one of their highest costs. So building resilience around these assets is crucial. Along a similar vein, we have seen changes in the type of equipment being installed as standard in office blocks and residential buildings. It's not uncommon to see the mechanical and electrical aspect of a building make up almost 40% of the total sum insured. This has advanced from 15%, probably 15 years ago. And as a result, we've also seen energy prices, so people become more focused on reducing their carbon footprint. We have seen lots of companies embrace green technologies, so the likes of PV panels on roof, battery storage systems, ground source heat pumps and building management systems, all geared towards the efficiency of a building becoming more and more commonplace. Again, if we looked at the placement of this building on a traditional basis, many property owners would only look to insure the statutory items, the lift, the boiler and the window cleaning equipment, because that was what they had to have inspected. But as we see here, there's a lot more going on which could easily be missed and leave your client open to financial loss. It's not just those energy related items that need to be insured. Things like air conditioning units are extremely expensive and costly to replace. Things like electrical distribution panels are very susceptible to damage and can have a massive impact. Most buildings, if they have no power, would struggle to operate in any way. Going forward, the drive towards more efficient buildings is not going to go away. More efficient buildings will be easier to rent and sell, and most tenants will want to be in a building that they can say that they're helping to reduce their energy and carbon footprint. So the increase in technology is sure to increase even further. Future trends, as I've mentioned before, the focus on energy efficiency is not going away. Increased energy costs is something that we're all learning to live with. And this will drive a focus on energy efficiency. You only need to drive up any residential street to see the number of houses that are investing in solar panels and battery storage. Businesses will have to make investment in the new kit to increase energy efficiency to keep their products competitive to their customers. As the technology gets smarter, so will more devices be connected to the cloud and export vast amounts of data. It's predicted that there will be 38.6 billion IoT connected devices around the world by the end of this year, and 50 billion by 2030. The real positive is the data coming out of these devices will allow real-time condition monitoring. For example, vibrational heat, which can predict a machine is running under stress, will prevent a breakdown. This gives benefits to the client as it will help reduce unscheduled downtime. This will hopefully lead to the industry becoming more proactive and reactive. I, for one, welcome the day where we turn up to a customer site to fix a breakdown before it has happened. It feels very futuristic and Minority Report, but it's really not that far away. What is equipment breakdown? Most of us have only exposure to breakdown insurance when we take out an inspection cover with some unforeseen damage, or when we buy it domestically on a new TV or washing machine. Today, I just wanted to briefly run through our increased reliance on machines and technology, understand the complexity of some of the challenges that brings, and run through the different variances of breakdown insurance. What is an equipment breakdown? Equipment breakdown is a sudden and unexpected break-in, failure, distortion or burning out of any part of the machinery and equipment whilst in ordinary use, stopping the equipment from working and so requiring repair or replacement before normal work can be resumed. Such breakdowns result in damage in some shape or form. However, in today's world of electronics, products can include microscopic components, meaning that damage breakdown can occur without showing any visible signs of damage. Breakdown is not just about manufacturing or process equipment. Many buildings, as I said before, have vast amounts of mechanical electrical system. And for example, a building's electrical management system is a complex and very expensive piece of kit which is vulnerable to electrical failures. The causes of breakdown, both electrical and mechanical, are wide and varied. These include electrical burnouts, short-circuiting, power surge events, overheating, stress and fatigue failure, machine overspeed, shock load events, fracturing of moving parts, lack of lubricants or coolants, ingress damage, to name just some. Importantly also to consider is human error. from carelessness and poorly trained operators to the bypassing safety features or operating equipment beyond its capacity. Good maintenance and spare parts may help keep equipment running in sound condition and reduce the likelihood of failure, but a breakdown of equipment due to operator error remains. Equipment breakdown is a form of property insurance and is often embedded in a property policy. It offers protection from unexpected costs that may arise from mechanical, electrical or equipment failure. The primary focus of cover is the accidental damage and breakdown during normal operation, including when caused operator error. It also includes explosion or collapse of boilers and equipment under steam or fluid pressure. Some policies also cover the malfunction of computer equipment or electronic circuitry controlling or operating equipment, even if there is no visible damage. An optional cover under most policies is business interruption, which will cover for a loss or a loss of reduction in increase in revenue and any increased costs of work incurred that helps the insured avoid or minimize a reduction in their income. Business interruption is not available on a standalone basis, but is dependent on equipment breakdown being insured under the same policy. Also, an option for some policies is to cover for deterioration of stock for refrigerated or cold storage risks, which result in the breakdown of, which follows the breakdown of a refrigerating plant, including failure of thermostatic or controlling devices. Equipment is normally insured on a breakdown policy, either on an itemized basis or a more generic blanket basis. Typical breakdown coverage. Equipment breakdown coverage provides against the cost of repair equipment, or if beyond economical repair, the cost of replacement. Policies would normally include extensions to cover various expenses such as costs of hiring temporary replacement equipment during a period of repair, disposal or clean-up costs of any contaminated property, or dismantling and removal costs, to mention a few. There are of course a few exclusions. Typically these would include wear and tear, which consists of wear and tear which is inevitable from normal operation, or usage of the equipment is excluded. However, ensuring damage or resultant damage to other parts of the insured equipment is included. Property perils, as I say, that would be normally covered under a property policy. Coverage does not pick up losses from intentional overloading, testing, experimental or deliberate application of any of the abnormal conditions. Also excluded is damage or breakdown resulting from a cyber event, including virus hacking or denial of service attacks. It's also worth thinking, if you have any connected equipment, about this particular exclusion, and maybe worth thinking about having a cyber policy. Common equipment myths. As mentioned on a previous slide, as well as providing cover for equipment that needs to be repaired, we can also cover financial loss that may arise. This helps businesses and organisations mitigate any loss and resume operations as quickly as possible. Equipment breakdown insurance offers protection against sudden and unforeseen events which are not typically included under property policies. By addressing both the repair costs of the equipment and also the financial impact, equipment breakdown goes beyond most typical commercial insurance covers. Equipment breakdown insurance is intended to provide cover for sudden and unforeseen damage, including breakdown, the item and also if the item needs to be repaired or replaced. Wear and tear damage is not covered, however, but any ensuring damage resulting from the wear and tear failure is not excluded. Common types of breakdown insurance and some of the key industries. So what equipment is in scope and which sectors is it relevant to? In reality, all of the industries here mentioned have a reliance on equipment breakdown, from your coffee shop to your doctor's surgery. Historically, equipment breakdown insurance was presented as coverage for large manufacturers, but that is now far from the case. In the past, we were primarily concerned with installed equipment and systems at insured premises that require statutory inspection, but as businesses have evolved and are buying more and more complex technology and kit, so have the insurance policies that we can offer. Think about your average shop. They will have an alarm system, CCTV, maybe a digital smart telephone system, stock control, tills, credit card readers, just to name some of the items. all of those will be susceptible to breakdown insurance and could have an impact on their operation running. A growing need for breakdown insurance. As we mentioned earlier, less than half the businesses could absorb costs. Technology helps business and organisation in numerous ways, such as achieving greater output, reducing costs, improving quality and increasing efficiencies generally. But as technology advances, machinery and equipment becomes ever more complex. We are often less resilient to breakdowns than we used to be, as everything is now much more complicated and automated. Sectors such as manufacturing, warehouse and logistics depend upon intricate machinery and equipment that has seen rapid technological advancements. The growing value of business equipment and the rising cost of repair underline the importance of having appropriate insurance cover in place. According to analysts, the global equipment breakdown market is on an upward trajectory, with projections indicating a compound growth rate of 11.7% from 2023 to 2030. Ensuring equipment breakdown insurance remains operational is fundamental to a business success and survival. In the UK in 2023, SMEs made up 99% of the total businesses, where the median profit made by SMEs in 2020 was 12,000. On those stats, many businesses would struggle to absorb the unexpected cost of an equipment breakdown. Research conducted by HSB highlights how vulnerable businesses could be to sudden unforeseen damage and equipment breakdowns. As we mentioned earlier, 62% of those surveyed said their business would not be able to survive longer than 3 months if the event of a critical piece of equipment halted their ability to trade, and only 60% would be able to absorb this unexpected cost within their revenue. Understanding the cost. Equipment repair or replacement times can vary due to breakdown severity and complexity of the equipment and availability of spares or replacement times. Understanding and evaluating the true cost of equipment failures is difficult to determine. A report by Industry in Motion estimates that the average hourly rate can range from 1,700 to 7,500, but this can vary from one sector to the next. In the UK warehousing and logistics sector, for example, each year 3,000 hours are reportedly lost and wasted due to breakdown. Equipment breakdowns can severely restrict material handling, bringing distribution lines to a halt and leading to product delays and supply chain disruptions. 82% of manufacturers have experienced at least one unplanned downtime during the last 3 years, with many more suffering 2 or more incidents. Every business and organisation eventually suffers some sort of unexpected breakdown, but the impact hits some industry sectors much more than others. It is estimated that a 200-room hotel on average has 1,500 equipment failures per month. Commonly affected assets include heating and ventilation, air conditioning units, electrical installation and lifts. Commercial kitchens or restaurants are equally challenging environments to manage in the event of equipment breakdown. The true cost of equipment failures. Every hour a business isn't operational due to an equipment failure can translate directly to a loss of income. Equipment breakdown can adversely affect businesses. Impact can be short-term and long-term and may lead to indirect or direct costs. The impact of any financial loss can be felt immediately, but the often long-term impact is harder to quantify when assessing lost revenue opportunities. Equipment replacement or repair can result in unplanned and unbudgeted costs and put great strain on a business. Determining the overall cost of equipment breakdown is several variables with short and long-term impacts. Examples include production losses, which may be incurred as a result of unscheduled downtime, including wasted products or material and missed deadlines. Increased labour costs such as overtime or hiring outside contractors may be incurred in playing catch-up. Financial loss result may be from lost revenue or reduced profit margin. Then there is also the actual cost of repairing the item or equipment itself. The increased delivery costs that may be incurred in order to fulfill urgent orders more quickly, and the loss of goodwill and strained relationship on customers and suppliers. I will now hand over to Rebecca.
Thank you. Okay, so on to the next slide. So what we've put together here is just a bit of an example of where we're seeing the claims. So it's 50% of claims relate to boiler failures. We see about 7% of claims that relate to lifts, and then 8% of claims relate to chillers, fridges and freezers. So alongside with them 8%, you'll also find that you get the bigger impact from things like the deterioration of stock as well needs to be considered, and the impact that that will have on the business. On to the next one. So this slide just gives a bit of a breakdown of some claims examples just to bring what Dan said a bit more to life. So for the first one is the CNC machine. So this insured manufactures precision machined parts. So a collision occurred on a CNC milling machine. So an engineer went out and inspected it and confirmed that due to a tool setting error, so this was actually an operator error claim, there was a number of parts that needed to be replaced, but this claim was settled at £5,200. So the next one is the CNC 5-axis machine. This machine shut down and set off an alarm. And a loss adjuster was appointed, and the insured had engineers as well who attended the site. The main machinery rotary table had seized and needed replacing. So with the CNC manufacturers, they only repair using their own parts. So we ended up having to replace the machine, and that was a claim valued at 70,000. The Bob's die cutter is another one of mechanical breakdown. So this insured manufactures paper and cardboard containers. So in this incident, a chain drive pin broke, which resulted in damage to the chain drivers, gripper bars, die cutter, and also the timing gears. So engineers attended site and provided a report which confirmed that it was just a clean stress fracture, which means that there was no wear and tear involved in that. Due to this, they've got the parts replaced, and that was claim valued at £34,850. The last example on the screen is for the Speedmaster printer. So this insured produces and prints manufacturing material, so relies heavily on their printers. The cylinder wash rack is mounted between each printing roll. When it was lowered, it failed to lower evenly, which caused significant damage to quite a few different parts of the machine. This effectively put the machine completely out of use. Engineers confirmed again, there was no wear and tear. It was just parts that had failed, and that claim was settled for £46,300. These are all some examples, and we've got quite different ones where it's either mechanical breakdown or, like what Dan mentioned, about operator error included as well. But all of them will have had significant impact because these industries rely heavily on these machines. On to the next slide. So the key is, as these companies rely heavily on the machinery, it's really important to get the claims in notified so we can get the process moving forward to prevent any downtime for them. So early notification is key, and in that, providing as much detail in the circumstances, so images of the machines, any parts that have been damaged, details of what's happened, as soon as we can. What we would also ask is that, instruct a trusted engineer. Most of these companies will have people who come out and service them. So provide an engineer's report, which we can confirm what the exact cause of the breakdown is. And then any supporting documents. So like I said, if it's a machine that's been serviced recently, maintained, or anything that they have to have for legal certification, provide copies and evidence of that. All this helps to do is just confirm any liability. And then the last key point is mainly provide an estimate to repair or replace if we can't be able to get any parts. And that will all go again based on what the engineers will have advised on that. Thanks, Dan.
Thanks, Rebecca. I'm going to talk about some of the key things that we should think about, really, why your customers should take out breakdown insurance. This is insurance for me, is to transfer those unexpected costs from your client to us as the insurer. As I said earlier, most SMEs would struggle to put money aside for new kit or spare parts. The loss of revenue, as we talked about, is unlikely to be covered elsewhere, and this will be critical to business survival. As we said, with 62% would not be able to survive more than 3 months. As an insurance advisor, should we be looking at the best advice for our customers? And if we don't talk about these breakdown exposures, are we picking up all those gaps, and are we doing our job properly? The aim of obviously insurance is to give our customers the peace of mind. They are more likely to have a breakdown than they are a fire. Yet it's not very often a breakdown that will keep your customers awake at night. So I think sometimes it's good to talk about those scenarios and understand what key items of kit or kit that they have that dependency on, what would realistically stop their business from being able to generate that revenue that they depend on. Most business owners don't want to be disruptive following a loss. They are good at running their business. They don't want this inconvenience. This policy helps them to step in. We will assist in replacing the parts, helping with repairs. They very often will not know what to do, and that can be quite time consuming. We pick up all of that, allowing them to carry on and focus on running their business at this very critical time. I think from our point of view, how can you help your clients? I think double check the coverage. SUD, as we've mentioned before, on statutory plant just isn't enough. Most businesses, that tends to only be about 15% of the equipment that could be susceptible to breakdown. So it's worth really thinking with your customers and having a chat to say, okay, what other items of kit could be in scope of this policy, or where can we help you? Some policies do have embedded breakdown. We do embed our product into quite a few insurers and MGAs out there, so it's worth having a look at some of the competitors and product wordings out there to see where cover starts and stops. Understand the customers that you have. Certain trades are much more reliant on technology and mechanical equipment. There's certainly a number of guides on the HSB website if you wanted to have a look at that, and there will certainly be a QR code that will direct you towards that way later on in the presentation. I think also understand your client's key items of key plant and the lead time on spares. We operate in very much a just-in-time delivery world now. Most customers don't tend to have a rack of spares, and even if they did, it's very difficult for them to actually go out and replace or maintain that equipment themselves. It's often too complicated to do that, and we have to fly often specialists in from other countries to repair some of these key items of kit. The main thing really is just to talk to your customer, understand what their future requirements will be. If they're looking to invest in a key piece of kit, that certainly should put your ears up to say, okay, is this a significant investment? How much is that going to cost? Is there an insurance requirement? Once you've got used to using that piece of kit, what impact would that have if it was suddenly taken away? Do you still have the workarounds in order to keep your business functioning should the worst happen? And what impact would that have obviously on your revenue? So in summary, I think we've established that businesses are becoming more reliant on technology than they ever have before. The cost of equipment is rising, and it's becoming more and more high tech, as is the cost to repair. Without adequate insurance in place, I think most businesses would struggle when one of their prized pieces of kit broken, and they would then suffer financial crisis or even worse, go out of business. We think, although we probably would, that equipment breakdown is a crucial part of coverage and is certainly something that you should think about in a forward-thinking insurance strategy. As insurance professionals, we have a job to advise our customers. They don't always have to take our advice, but it's certainly our role to make them aware of some of the coverages and the risks that they face on a day-to-day basis. Hopefully, that brings us to the end of the presentation, and I'll hand over to Jess. But before we do, I just want to sort of run through the key points. Hopefully, following this presentation, you will be able to describe how evolving technology is impacting businesses and their insurance needs, explain the financial implications of an equipment failure, give examples of the types of equipment and industries that are most at risk from breakdowns, and you will now be able to dispel some of the myths that surround breakdown insurance. What we've got, as I've mentioned here before, this is a QR code that will take you to an HSB white paper on breakdown insurance, and certainly some of the product guides that we have. And this is mine and Rebecca's contact details should you wish to get in contact with us after. So I want to hand back to Jess and open the floor to any questions that have come in. Thank you.
Thank you very much to HSB and Daniel and Rebecca for taking the time to talk to our members today. That was really insightful, and we hope that you've taken away some valuable and practical tips. I'll just wait a few minutes just to see if anyone's got any questions, but in the meantime, if you can please complete our feedback survey, we'd really appreciate it. The link will also be sent to you via email alongside the recording of the session within the next couple of weeks, and we'll also keep you informed of our forthcoming events, and details can be found on the MGAA website. If you do have any further questions, please send them through to us, and I'm sure HSB will be happy to answer those. So it looks like we don't have any extra questions today, so we'll leave it there. But as I said, if you have any questions, please send them over to us. And thanks again to HSB and for everyone joining us this afternoon. Thank you very much.
Lovely. Thanks, everyone.
Thank you.